I actually think it has a very important head start, which is to have a properly functioning carbon market. That is a major advantage. I think in the last 2 years, there's been a fear that with the Inflation Reduction Act in the US, Europe was losing the leadership. I think in some areas it has certainly lagged. But overall, I think the carbon market works better than the IRA. It's more affordable. It actually raises tax revenues. It's technology agnostic. And I think it's going to be a key instrument for Europe to maintain leadership in the decarbonization industries in years to come.
Michele, that's very interesting then. I mean, because in that context, you're saying that Europe actually remains competitive and will keep meeting its transitional goals then. Is that what I'm getting?
Yeah, I think the core to the answer here is in the natural gas market, because natural gas is absolutely key as a transition fuel and became completely unaffordable in Europe in 2022. Our view is that with all of the new liquefied natural gas coming from the US and Qatar starting next year, but continuing and growing capacity by 50% by the end of the decade, natural gas will become affordable again in Europe in the next 2 to 3 years. And affordable natural gas, I think, completely changes the competitiveness of Europe. There is a major opportunity that I think Europe needs to grab to start to move away from all of the narrative of deindustrialization.
Michele, but people might then go on and say, well, that IRA has increased investment into the United States, particularly in areas like natural resources, EVs, for example, as well, in some ways. And yet maybe Europe is falling behind. You don't seem to think so.
I think the IRA has been very successful. We've seen $500 billion of investments announced, especially in batteries, renewables, and specifically solar. But I do think that Europe has a chance here to take back a lot of the leadership. I think it has a real opportunity to create one of the largest renewables infrastructure in the world. But what it needs, even more than an IRA equivalent, is quicker permitting, because it all comes back to permitting and to the connection to grids and infrastructure. That, I think, will be the key. And a connected Europe, I think, can become one of the renewable powerhouses of the world.
Michele, lovely to see you, my friend. Let's go back a stage as well and just look at why global carbon markets have failed ignominiously to rebalance the level playing field between hydrocarbons and, well, electrons and molecules, hydrocarbons and renewables as well. Why have they failed, and why are you so optimistic that 2028 is a pivotal moment?
I think they failed because they simply were never put in place, right? There was never a global carbon market outside of the voluntary. And to be fair, outside of Europe, there's no other major carbon market that has properly matured. We've seen the beginning of carbon markets in China, but it's still too early days. But what I think will really make a difference in the next 3 years will be 3 things. First of all, I think the border adjustment will make a big difference to industry in Europe and create a level playing field. Second, I think the cheaper natural gas prices will allow for Europe to see an increased carbon price without seeing energy inflation and without hurting the consumer and the industrial producers. And thirdly, I believe we're also going to start to see an increasing role in transport and heating with the introduction in 2027 of a second EU ETS scheme focused on transport and heating. And I think these 3 catalysts would really allow the European carbon market to move beyond the power generation and to actually address the bulk of the continent's carbon emissions.